I think I always like 100% or more than 70 or 80% unlock tokens in general to identify the best possible ones. So it would be not the new tokens, but like already established tokens that have survived. Obviously, Bitcoin I think is definitely clearly undervalued right now, given where the future interest rates would be, given how volatile given overall market conditions, how just gold market cap has risen almost near to $20 trillion. Today probably a little bit lower now, given the rhetoric from the White House that they don't want to see Jerome Powell leaving the position as Fed chair, but also they're very open to find a friendly solution towards trade wars. So otherwise, Bitcoin we are around 90,000, 94. So that's almost around 1.9 trillion dollars. So you're looking at 10 times more possibility here for catching up with the gold market cap in the medium or very long term. So Bitcoin is definitely undervalued. And this cycle last year, big winner was Solana, which has been doing poorly since the big unlock happened. So Solana has been below 100, now trading around 130, 140. Definitely, the Solana ecosystem has been producing more revenues than Ethereum. So definitely it's very undervalued compared to where it should be, the intrinsic value. Ethereum, the dog of this cycle, given a lot of problems that the narrative and the issues which are very well known to everybody, is also undervalued because ETH BTC ratio is completely out of sync. So there is a calculation which ETH should be about 10,000 if it have everything done correctly. So you can't short ETH because it's already shorted so much by almost everybody. So you have pairs that traded in the market, ETH BTC, ETH Sol, ETH SUI. So everybody is kind of very, very bearish on ETH. So this is a very, very good signal for building a long-term positioning. And of course, given how powerful the bigger capital markets are, the entire narrative is driven from the story of the US administration policies, the bigger capital markets, and very heavily correlated there. And that's what, it's driving the story. Even I would say, as we had a scenario where S&P and NASDAQ were down 2.5% to 3%, Bitcoin up 3%. This is mainly because markets were afraid that the Federal Reserve may not have independence. So they went into an asset where they find it very clean, which is gold, which is Swiss franc, yen, and then German government bonds, and then Bitcoin as well. So I think it's also the story of the bigger markets is driving the Bitcoin story. And today we saw another rally where they said, look, we're going to basically do really nothing. We're going to find a trade war. So the story is risk on. So you have NASDAQ up 4%, S&P up 3.5% or 3%. Bitcoin also rallied. So even though the rally looks going higher, but the narrative is very different. So
and what's shifted though is the narrative is not only crypto is volatile, it's also the traditional markets have become volatile.
So I think on the currency side, we really see Swiss franc as a huge standout among all the currencies, because Swiss franc is up almost between 11 and 12% against dollar, which is phenomenal. And Swiss National Bank has been cutting the rate. So if you really think about it, it's completely like crazy that the kind of rally that we have seen in Swiss franc has seen relentless bid among the Swiss assets. And then gold is a huge standout. I mean, we haven't seen gold has seen, if you see the chart, it's parabolic. You see the asset is a over $10 trillion asset, reaching to 20 trillion now. So that's a clear huge standout this year among all assets, even at this point outperforming Bitcoin. And definitely Bitcoin is also, I would say, a standout because it really struggled in the very early, where people had to deleverage and reduce their positioning, and then that affected Bitcoin positioning. And now people are coming back into that, playing as an asset that could be a play on the new US administration friendly policies. At the same time, an independence from any mistakes that administration may do, like independence of Federal Reserve, also a rally towards expansion of the M2 money base. We thought it may be kind of inflationary. Inflation in the past, when bond yields went high, Bitcoin really didn't perform well. It came down. But I think what we are seeing is a maturity of the cycle. The flow is very different this time, because now I think most of the big hedge funds, most of the macro names do trade Bitcoin. So it has a very high correlation to typical markets. It's not anymore moving based on, just crypto. So it's a really Bitcoin as a standout compared to all other assets in the crypto. Yeah, I think, in crypto, the valuations are not determined by the VCs or the founders. It is mostly determined by a buying and selling flows that would be largely dictate the trajectory of the token price, basically. So how does this come in play? So mostly, if you see, Bitcoin has access to very wide distribution through ETFs. It also has revenues. It also has the largest community it has. And then you have Solana and you have Ethereum. They have some of the distribution channels. Solana ETFs are just getting approved. They also have, the ecosystem makes revenue, so you can price it. But a lot of protocols actually don't make any money. So they're completely based on speculation, future expected returns, or certain buybacks or etc. So you have to be very careful to put your hard-earned money, because it's very, very difficult to make the money in the very long term, because you could make a lot 3x, 4x, but you may be losing all the money in one go. So I think your allocation need to be market cap weighted. I think if you have $100, so you should look at what is the most trended tokens, and then I would definitely avoid exchange tokens, because exchange tokens are very much, unless you're really trading on the exchange, you're looking for a discount. You shouldn't really be buying an exchange token, because this is actually an equity play. We have seen with the FTX case how FTT went to almost virtually no value from some value. So that should be very, very important. I'm not again here bearish on any exchange token. They may be excellent investments if you get in the right time, but you may not know when there is a selling or anything. Often these exchange tokens are not widely listed on every other platform. They are listed on their own exchange, right? So I think then, if you have many exchanges have it. So I think you should be very, very careful to have a very large position in your portfolio. So I would say you should have pretty decent sized position, over 60% in Bitcoin. You could have up to 10% on Solana, and then between 1 and 5% on Ethereum, and then other alts you can have a smaller exposure there. But however, people are always different. People want to actually have a lot of returns very quickly. Some like meme coins, some like that. So you really need to risk only what you can lose in some of these tokens, because if there are no flows in terms of who actually are buyers, if the insiders are really selling, I think that's a pretty negative signal. At the same time, institutions are only buying most liquid, fully distributed, revenue generating, or potential to revenue generating tokens, like really serious names. So they're not buying your low, small cap. You're only 15 to 20% vested. And then you are doing an OTC deal with a very large discount. This could be attractive to some people, but pure liquid tokens are the name of the game in this cycle, at least. So that's why I think you need to be diversified in crypto. You can't bet everything on one token, because unfortunate things can happen. And that's why I say people, you should own physical instead of, unless you are really a professional, a sincere trader in front of the screens, you shouldn't be trading perpetual futures. You shouldn't be trade leverage trading.